Yes, Brent crude is currently trading at $73 per barrel, which is not reflecting the actual impact of this war. So Monday morning is something that we'll see that. But given the fact that oil is expected to be on the higher side, this will definitely have some bearing on India because nearly 85% of our energy requirement is met via imports. However, the intensity of the same has come down. But still, given the fact that 85% of the energy requirement is met through imports, there will be some impact not only on multiple sectors but also on India Inc. as well, given the fact that a 10% increase in Brent prices increases the CPI and WPI or inflation by around 40 to 80 basis points. A 10% increase in crude oil prices also widens our current account deficit by nearly 30 bips. And if you look at the sectors which gets impacted, now firstly, when it comes to the oil marketing companies, rising crude oil prices will impact their marketing margins. Higher crude prices means lower marketing margins, and a drop of around 0.5 rupees per litre drop in the marketing margin impacts the EBITDA of oil marketing companies, that is IOCL, BPCL and HPCL, by anywhere between 7 to 11%. When it comes to paint companies, nearly 40% of the raw material cost is related to crude oil prices. So that could also this could also impact their margins if there is a sudden rise in the crude prices. And when it comes to aviation companies like Indigo and SpiceJet, 40% again of the raw material cost is crude oil is related to crude oil because ATF cost for the major part of their raw material cost, and if that increases, again their margins could also get impacted. When it comes to lubricant manufacturers like Gulf Oil and Castrol, 50% of the raw material cost is crude derivatives. A rise in crude oil prices will impact them as well. And when it comes to tire companies, synthetic rubber, carbon black and multiple other chemicals, the prices of these raw material are derivative of crude oil prices. A rising crude oil prices will increase the prices of these raw materials also, and these total raw material form nearly 40% of the total cost for any tire company. When it comes to cement companies, again 40 to 50% of their cost is either directly or indirectly linked to crude, and a rising crude oil prices could increase their cost as well. For specialty chemical, multiple companies stand to get impacted because key raw material prices are again related to crude oil prices. But on the positive side, for explorers like ONGC, Oil India, Vedanta and HOEC, for them it will be positive given the fact that a $5 per barrel rise in the Brent crude prices will impact positively their EPS by around 7 to 12%. But do remember, to actually realize this impact or to actually see the negative impact, crude oil prices need to stay higher for a longer period of time. If it is just for a short period of time, there won't be much of an impact.
Sure.